Okay, traders. Now we have a no-brainer trade set up here on the Aussie today. And you know what? It's not all the time I would come out and say, let's really rip into the employment numbers. But today it's a unique setup that is very compelling for weaker numbers. Now, sort of let me explain from the beginning, and then we'll take you through the whole trade there. So the Aussie, out of all the sort of developed countries, most of them are in a sort of cutting cycle. Obviously, the Bank of Japan not. The Bank of England is on a knife edge, and that just leaves the Aussie out here by themselves. No change, 84.7%, right? That's what's factored into the derivatives market. That means if something was to come out very negative in Australia, that would have to change, and you would see a sell-off in the Aussie anticipating that move to a cutting cycle. And that's what the employment numbers are, right? They're the second level. You've got these CPI numbers, and then you've got the employment numbers. Now, what we need for this trade to come into play, okay, we need numbers weaker than the forecast, okay, which is 4.1% of the unemployment rate and the 20,000 change in employment. And also, just keep an eye on the full-time employment. If that is a lot weaker and a negative number, that's more structural employment, you know, health, super, everything else is included. That's a big negative, right? But like ideally, what do we want? We want something around this or below the minimum level here. And also above the unemployment rate, above 4.2. We get a blowout in the unemployment rate and we get a low print on the employment change, like a negative number, it's showtime, right? And this trade will fit straight into play. Now, what would I be trading here? Well, there's two sort of instruments, to be honest, right? The Aussie, if I looked at the Aussie here, and you know what? It hasn't got a great level, and this sort of makes it a little bit more compelling. And it's not all the time. Like, we love having support and resistance levels to provide liquidity to get into some of these trades, but you don't often have it. And when it's not there, that leaves a bit of an abyss, right? Aussie sort of just cranking away here. Everyone will be thinking, well, where does it stop here, right? Well, there's nothing to the downside. So the Aussie is compelling. Don't be worried about the oversold situation just at the moment. Fresh fundamentals blow that away, right? So that's what I'm looking for here on the Aussie. And at the market level, 65.95, you're looking to get in, I'd say 15 points below the market, right? That gives you ample time to avoid any initial volatility and then look for a trade to the downside, okay? Now, as well as that, you've got to think about the yen crosses, and dollar yen or Aussie yen was drifting lower. It's just sort of stalled, but we are right on the edge of the cloud here. And I would suspect, you know, we had the Japanese GDP numbers stronger. It doesn't really have an impact, but Aussie employment will on all the crosses. Weaker numbers in particular would give us a start here in the same profile. Getting into the market sort of 15 points below, try and avoid any initial volatility before the release. If we get weaker numbers, you hold the trade, right? And this is the sort of secret sauce, which a bit more experience comes into play. The closer it is to -5, the better the trade. Right? Ideally, if we get a print of like -20, it's going to be exceptionally volatile and we're going to get gapped. You have to reassess where you got in and what's happening. So a number right down here and definitely 4.2 or above, the trade is a good trade, right? You just got to sort of have a look after the release. Like, to me, an ideal number, you know, and I'm not sort of just speculating, you expect the unexpected, 4.3, right? Or above, and say -30K, Aussie falls out of bed, right? And these trades will be in play. Sweet as you like. So you could be executing those, either trading live, where you got more control, or just using a pending order. I decrease your trade size if you're using pending orders, because you know what? There is volatility. And the other thing I like about this whole opportunity here, check out the Aussie against all the crosses. It's going down, right? The direction for the Aussie's down. Weaker numbers goes with that, and it's showtime, right? This is a no-brainer. Check it out and see if it aligns with your trade perspective and your goals. And good luck and happy trading.